Mr. N. Kamakodi, Managing Director and CEO at the company. So if you could start by telling us how has the quarter been, what essentially are the hits and misses, and more importantly, what were the slippages, if any, in the quarter?
The third quarter has really gone in the way we all anticipated. When the financial year actually started during the beginning of the financial year 21-22, we shared with the market at large that we should be having about mid to high single-digit growth, and the incremental slippage should moderate which is front-loaded at the first half and all. So the whatever we shared with the market in terms of growth, slippages, gross NPA, NPA and all, everything had almost gone in the way we had anticipated. In fact, when we shared that, we did not expect 12th November new regulatory circular on the NPA upgradation. Even taking that into account, the slippage in the third quarter had been lower than whatever slippage that has happened in the second quarter. So the gross and net NPA has slowed down. The recoveries of NPA, in fact, had sequentially improved in the sense that the recoveries in the third quarter had been highest in the recent past, particularly on the quarterly recovery front. So, and the net interest margin is also holding around 4%. The return on assets also has crossed 1.3% against our expectation that we should be touching ROA of 1.5 towards the second half of financial year 22-23. On all major parameters, things have extremely gone almost in tune with whatever expectations we have shared. On growth front, earlier we had not pressed the growth pedal, and our entire growth had come purely from the gold loan and like say ECLGS loans and things like that. Now the confidence is back that we can move forward for growth. We are now getting ourselves ready to push the pedal for growth. The overall the SMA numbers, the overall stress in the portfolio also has come down. Overall, it has been a good quarter, much better than whatever we had anticipated during the year beginning. So year should also be ending in a big good way. This is what we think at this point of time.
Hi, Mr. Kamakodi. Good afternoon. Well, that point is taken that the recoveries have improved, but if you look at your P&L, the net interest income has remained flat at 490 crores, and the other income has also dipped a tad bit. Could you talk to us how the trend could be going forward?
See, the as I told, on net interest margin front, it is holding. So since we are into the decreasing interest rate scenario, both the yield on advances and the cost of funds have moderated. The credit deposit ratio has also slowly come down on an like say average basis. That's why for a 5% growth, the net interest income growth looks low. But once we have almost crossed that situation, once we press the growth pedal and when we start seeing the growth again, things should be coming back to the normalcy. On overall profitability front, despite having a reduction in the profit on sale of securities and other headwinds, because of better asset quality and decrease in the requirement of incremental provision, we are able to manage ROA and net profit in a holistic way.
So talk to us about your balance sheet growth. The bank is expected to drive the next phase of the growth in what form?
If you remember, somewhere in December 2019, just before the arrival of the COVID, we declared that we are taking our pedals, like taking our legs off the growth pedal as we were not comfortable with the general economy, and suddenly the COVID also came. Whatever growth we had recorded from that point, it had purely come because of, like say, zero risk-weighted growth, like be it gold loan or be it ECLGS loans and things like that. And we had not, like say, started growing very much in our regular core advances of, like say, small and medium scale enterprises, agriculture, commercial trading sectors, and things like that. Now we are from the data of performance of the general economy and also the SMAs in the systems and including our own portfolio, our confidence to increase, like say, go for growth has come back. So we are organizing ourselves for the growth going forward. So we should be getting back to the like say double-digit growth for the financial year 22-23. And when that growth actually comes back from our core segment, from small and medium scale enterprises, commercial trading or agriculture and all, our overall, like say, profitability growth on NII front should also improve. And then we will be crossing that even 1.5 ROA, and we should be looking for something beyond that too.